Started trading initially when I was 17 in the first COVID lockdown. I lived at my mum's. I had a car that I couldn't really afford at the time. There wasn't really much to pay for each month. So for making £2 a month, all I had to do was just cut out all the shit that I was doing, like partying. I remember I got to my 20th birthday and I knew I could trade. I was at my mate's house and I was literally just depressed. I think one of the worst things that can happen to a new trader, or to a trader full stop, is
people are saying they want freedom and people are saying they just want to earn £2 a month and they want to live freely.
They just don't obviously want you to get to that final stage where you can ultimately take money out of their pocket.
A consistency rule is not a bad thing though. Like sometimes
I had a payout recently that was 9k. It was bigger than what I'd normally go for a payout. In my eyes, profitable and funded profitable, two completely different things.
I think the only issue with the current prop firm space is today we're joined by Rob, a trader that's been trading for 5 years and has had over 100k in payouts. Rob, would you like to introduce yourself? Tell us about your background in trading.
Cool, yeah, so as he said, I'm Rob. Been trading for about 5 years. Main route to profitability was through using extortion amounts of funding through prop firms. Yeah, that's pretty much been my journey.
So what age did you actually start trading?
So started trading initially when I was 17 in the first COVID lockdown. Reason being is because obviously looking at apps on my phone, always trying to make money, discovered something called Trading 212 and was interested in oil because at the time oil prices were really low. No one was obviously driving their cars and petrol in my head was a good buy. So yeah, first ever trade was an oil trade back in the first lockdown, which I'm guessing was about 2019, 2020, back when I was 17. So
okay, cool.
Yeah.
So you started trading stocks initially on Trading 212?
Initially, and then I realised Forex moved a lot quicker. There's a bit more money to be made there, and was just naturally attracted to Forex based on the amount of movements it had in comparison to like oil.
Yeah, I had the same experience. I jumped on Trading 212 as a young kid, and then you start seeing your USD that's moving rapidly compared to oil, compared to the S&P 500. So what actually caused you to go from oil to Forex to then trading with prop firms? How did you discover prop firms? Because I know you're a big prop firm trader.
Yeah, so I spent my first couple years ending up going from trading 212, obviously depositing into a personal account, trading my personals, blowing that, going up and down for about a year and a half until I ended up on a car park working as a COVID tester. And basically one other guy that I knew there also traded, and he showed me a course of which I couldn't afford. My girlfriend, who you can't see, actually bought the course for me. But that taught me a lot more around kind of concepts to use, strategy, basic things like proper risk management. I learned how to trade a bit more clearly, built my personal up a bit more so, and then found out about prop firms afterwards. And I was actually already a full-time trader once I found out about prop firms. So probably about 2.5 years in is when I got my first funded account with one of the biggest props and managed to get on the leaderboards too. And then kind of from there, it's just spiraled into funding with different props and kind of scaling through that way.
Compounding it, growing it. So what was the initial strategy that you started using? Like, was it support and resistance? Was it trend lines?
So I mean, like initially it was basic support and resistance, understanding trend lines, that kind of stuff, fundamentals, looking at news a bit more than maybe even I do now. But initially, the concepts that I'd go through was mainly like liquidity, supply and demand, a lot more like order block kind of trading, less specific to time frame in terms of when I'd actually look at the charts as well. So much more, in my eyes, basic style of trading initially. Now I trade with a much more kind of set criteria, at least for the mech strap. And then for me, I add discretion higher time frame wise to make it higher quality.
Okay, so you're starting off very basic. I think it's really important to build a core foundation in your trading.
100%.
And then you've developed it into a strategy that you trade every single day now, or is it
Yeah, so it's what I teach as well. I always think that as a trader, you need to have a base of profitability, and then that should give you a really good ROI over each year. So obviously you can determine that through your own testing. Then from there, if you're good and you can understand discretion, then you can classify your trades into high class, low class trades based on added confidences in your higher time frame. Once you figure that out, you can take the higher quality trades and assert more risk or start a challenge with that account or trade it on a funded account. You get what I'm saying? And the lower class ones, you either don't trade at all, or if you have loads of accounts, you can take almost every position on one and then only the class A trades on certain accounts. That's what I do really.
Okay, cool. What was like so you've gone through a massive journey, which most traders are probably going through now. What was like oh shit, this is like getting big now, this is getting good, I'm kind of knowing what I'm doing now?
Yeah, so I used to, obviously, when I was at the testing car park site, that was when obviously I started to really get trading and get into my groove of concepts and strategy and stuff like that, I started to probably get out of that break-even stage. I remember I got to my 20th birthday and I knew I could trade. I was in that break-even stage. I'd just gotten out of that break-even stage. I was at my mate's house and I was literally just depressed on my 20th birthday, thinking like, why is this not happening? I've been doing it for a few years now, and I'm really struggling to actually get the results. But I stuck at it, and basically at that point, I put literally every penny I had into trading from there on out for about 6 months. 6 months later, I was full-time. I'd managed to obviously build my first prop firm account, get leaderboards with that prop firm as well, and then start to scale into 200K, 300K, and then a few years later, a few mil. And that kind of process was all from really not giving up at that point where I was like, I'm just not seeing results, but still have the skill set. I think I know a lot of people now that have gotten to that point in their trading where they feel like they should be getting results, but they're not. They're following the plan, they're following the things that they should be doing, and they're just not seeing results. But you've got to zoom out a little bit and see it in the bigger picture, and it will come. You just need to be consistent and resilient, basically.
Yeah, definitely. I think one thing that's bugging me in the prop firm space is a lot of people are putting like their full wages into prop accounts, and they're trying to put like £1,000 into a cash account and flip it that day. And you can kind of get into a cycle of like gambling in a certain way. And like you said, if you have a strict set rule process and you have a strategy that you've refined and you've proved to yourself it's profitable, you need to go in that direction more so than just full put an account. So with what you said, where you started putting a lot of your wages into prop firm accounts, what advice would you give to people out there that are probably working a job and also trading?
So in my eyes, prop firms are the best route to obviously gain some sort of financial freedom to the point where you can invest heavy into a personal account or scale your prop firm accounts. So obviously, if I was to go back again and I knew about prop firms before I went full-time as a trader, then I would have probably waited until I had a few $100,000 at least in funding and consistent payouts, enough to be able to live off for 6, 7, 8, 9, 10 months probably.
Okay.
And the thing is like, if you're making, let's say, I was making about 2K a month, of which, when I went full-time, I think I was 20 or 19, something like that. Sorry,
that's gonna misses, yeah.
So I went full-time, and realistically, like I lived at my mum's. I didn't really have like loads of rent to pay for. I had a car that I couldn't really afford at the time in terms of like when I bought it. But other than that, like there wasn't really much to pay for each month. So if I'm making $2,000 a month, all I had to do was just cut out all the shit that I was doing, like partying, drinking, clothes, like the shit that you care about when you're a teenager. Just kind of cut that out and just purely put my capital into things like personal. Well, for me, it was personal accounts. And you do, being honest and being transparent about my journey. Initially, it was risk heavy or higher risk initially on my personal account. So like 5% risk rather than what you would do initially with just a 1% risk. But obviously, once I got into prop firms, I think my edge with prop firms is understanding what they actually are. I use this kind of example for the people that I mentor. And as much as, yes, a trader needs to have a base and a consistent style of trading, they need to prove to themselves that they're profitable over a long period of time, whether it be through loads of back testing data, then forward testing data, then a live account, or back testing straight to a live account and just risking off. So just doing 1%, waiting for 6 months, a year, and seeing if you're consistently profitable. That needs to happen, because otherwise you can't back yourself in the markets. But for me, I was at the point where I was already full-time. I was already doing that with a multi-5-figure personal account, and obviously risk off that point where I'd gotten to a good stage. Then I started doing prop firms, and I very quickly realized what they're asking you to do. They're asking you to make 100% of the equity that you've got to lose, not 10%. So they're asking for an account flip. That funded account that you're going for is actually, like I said, the FA funded account, I flip to AF and say they're asking for an account flip.
Yeah.
So once I understood that, I started thinking, right, how would be the most logistical way to get to a funded account or do an account flip? It wouldn't be slowly trading 1% up from let's say you're trying to do 500 quid to $1,000. You would have to have a high win rate strategy and maybe risk slightly higher, or even a low win rate strategy, but have multiple accounts to a degree. I'm not saying like hedging accounts against each other, but when you've got an account, accepting, okay, if I need to hit, let's say, a 4R to pass this account, I need to be risking 2% or 2.5%. So understanding that phase one, let's say you've got a 30% win rate or 40% win rate or 50% win rate if you're really good, then half the accounts you're starting are going into phase two, and half will be in just 2% drawdown. So that's the way that I look at phase ones. because that's the hardest part of the challenge that they're trying to get you to do. It's 100% of your equity. It's an account flip. So like I said, for me, I understood that pretty early. Got through phase 2, risk off, go back down to 1.5% risk, get through to phase 2, and this is where most traders mess up massively.
Yeah.
Is that flip of going through, I've just made 150% equity, now let's do it every month. Like, that just isn't reality.
Yeah.
I went through that with my first account, got to a really big payout, even got on the leaderboards for it, and then quickly realized you can't do that every month. Found myself in drawdown the next month. So it's one of those things that once you get funded, it's massively risk off. For me, it's generally 0.5 to 1 max % risk. And then always going to be those class A positions that I talked about earlier.
Yeah.
So for me, that's how I gain the consistency in payouts. And they're never big. Most of my payouts are like 2K, 1K. But obviously some accounts that I'm vlogging and trying to show off a little bit with, or don't trust a prop firm to be lasting for a year or 2 years, then those ones, I'll go for a 20K payout or a 10K payout. And I'll vlog that and show obviously proof that I am trading a live account, or a funded live account, so not a live account.
Yeah.
But yeah, that's probably, I'd say, my main edge over a lot of people, is they don't normally and can't accept the risk that a funded account's asking you to do to get funded, and then also the flip to get consistent payouts from that.
Yeah, I think it's a lot of the stuff in the industry now is like use 0.5% risk, 1% risk, and then just slowly grow the account. But I think putting more risk on, obviously depending on the circumstance of the person. If they can buy a £300-400 account, pretty much full boil, like you said, like account flip, then yeah, that's cool. I think the only issue with the current prop firm space is that there's rules to stop that.
Exactly.
So there's, like you said, consistency rules. There's one-sided betting, things like that. So have you found that more difficult as we've been moving into like this side of this year?
Yeah, yes and no. Like with consistency, like for example, I had a payout recently that was 9K, and it was bigger than what I'd normally go for a payout. And then midway through the funded account, they slapped on a 50, it's not 50%, yeah, 50% consistency rule. So suddenly I had this 9K payout, and I've got to basically make 20K to get the payout.
Yeah.
Luckily I did, but
brilliant.
like those kind of consistency rules, usually I'd be very happy with a 9K payout, and I'd happy days, easy money, move on to the next month or next 14 days. But in that case, it obviously helped massively. I haven't really had loads of problems with obviously funded accounts, because I'm only going for small payouts usually. So normally if it's just 0.5% days or consistency rules, then I'll just have to normally, again, risk off 0.5%, small wins. That's how I manage my funding. But obviously with the funded challenges, usually most props don't have a consistency rule on phase 1s or 2s. I've had a few that has, and I have had problems with them. I've recently got, I've gotten funded 240K with a prop firm, and 61% consistency, all targets hit, emails telling me that I've passed the account, and they're just not upgrading the account. So yeah, you're going to get it with props anyways, where they just don't obviously want you to get to that final stage where you can ultimately take money out of their pocket. But realistically, they've got rules in play to try and make sure that they're not taking big hits, like people obviously gambling on news, taking ridiculously big payouts. I don't usually have too many problems with payouts. It's more consistency rules, like in the challenges, if you get me.
Okay, so
move on from consistency rule, because we actually have one. So
yeah.
Okay.
But I mean, a consistency rule is not a bad thing though. Like we can a consistency rule is not a bad thing though. Like sometimes, from my mindset as a trader, of course, if you're trading on the prop, it's maybe something that's like, okay, there's one more thing to do, but depending on your strategy and depending on the way you trade, it can be quite easily achievable. So I think consistency rules aren't like the worst thing. But do you want to talk on that?
No, it's actually, I forgot to say on one of your last points, which kind of relates to that as well. I think one of the worst things that can happen to a new trader, or to a trader full stop, is being stuck in a challenge, phase 1 or phase 2, for months and months and months without passing. I think that's one of the worst possible situations for a new trader. I think it builds in ridiculously bad psyche. I think it starts to, challenges obviously build up good habits. Like you say, consistency rules can bring good habits, but equally, you're trading a demo account, which you'll like actually buy. Let's say you're in a challenge for 6 months, 7 months, 8 months. Probably by the time you're 6 months in, you're probably actually believing in your own head that capital's real. When it's not, it's probably cost you 400 quid, 500 quid.
Yeah.
So I think it's actually a really bad thing for traders to be in prop firm challenges for way too long, because you never get to experience actual live markets for a start. You've got an unrealistic target. If I said to you right now, you get on a personal, make 100%, that would take you like probably around a year. I don't know, a year.
A real cash account. Yeah,
exactly.
Yeah.
So if you wanted to do that, it would take you a long time. But obviously, no one's advertising props in that way. No one wants to be in a demo account for a whole year before they can start actually making money, or even just move into phase 2.
Yeah.
So I would definitely say consistency rules are like good in the fact that like they're training in for a trader to be consistent. But I don't think it's good to be in a prop firm for a long period of time in terms of phase 1 or phase 2.
No, I completely agree. I see a lot of people online that just are on the same phase 1 for like 3 to 6 months, and it's just like, in my mindset, just full point and get rid of it and start fresh. You need a fresh account, fresh mindset. I mean, when I was younger trading cash accounts, I did this habit of getting in drawdown in my cash accounts. So what I'd do is I'd keep seeing the history and I go, right, I've got $2,000 to make before I'm even profitable, right? So what I'd do is completely take my money out, wipe it, put it in a fresh account, and then in my mind, I've got like a fresh 1K account, right? Yeah. So there's no history to look back. It's a completely fresh start, and that really helped with my psychology. So I think you're right with the prop firms. If you're dragging an account on for so long, it's like just let it go and start afresh. I think when younger people in the prop firm space trade, they think that they have to be perfect and every trade has to be perfect setup, and they're waiting and they're taking their time, but they're wasting time at the same time, if that makes sense. Yeah. It's like you kind of need to get rid of that thought process of this is a 100K like real live account. You're being evaluated, right? So if you think about it, if you're trading a phase 1 like you trade a funded, and you've been on a phase 1 for 6 months, that means on the funded account you won't make a payout for 6 months.
And the thing is as well with let's say I take a prop firm challenge, it costs me £500. I've got an 100K account or whatever it costs these days. You've passed phase 1. Let's say you've taken 9 months to pass phase 1. You've achieved the target. Well done. You're on to phase 2. You make 5% to move on to the funded account. Congrats, you're on a funded account. Then you blow the account. You've just spent a year or 9 months or 10 months or 6 months, however long period of time to get onto a funded account. You've blown it. You're technically profitable because you're 5% up over the phase 1, phase 2, and then blowing the funded account. Yet you've made no money, and you're actually down. And you yourself probably feel like you're massively underperforming. You're doing loads of things wrong, and you probably aren't. If you're getting to that stage consistently with really low risk, I'd imagine, then you're probably a good trader. You probably have the profitability there. But obviously, in my eyes, profitable and funded profitable, 2 completely different things.
I agree.
And almost all of it is due to a trader's funded approach and psychology when they're in the phases compared to the funded account, in my opinion.
Yeah.
So that's like a big thing that I always talk about generally with people that I teach. That I have people come to me all the time. They spend months and months in challenges. I'm just like, right, you need to fix something up, because look at the challenge for what it is. In my head, for example, let's say I'm dealing with funded accounts and I've got a 200K funded account, and there's a class B trade that's appeared, and I can either risk 2K on my actual funded account, which I consider my money at that point. It's obviously not, but I consider it my money, because when you've got a 200K account, you've got 10% equity, so I've got 20K there basically. I can either risk 10% of that on a 1% trade, or I can buy a new challenge for like 800 quid. And my risk to have a whole another 10% equity, obviously in phase 1, my risk for that is less than what it would have been on the funded account. So if I'm seeing a class B trade, I'm saving money by taking it on a well, not saving money, but you get what I'm saying, like not risking my live capital. But I'm actually technically risking less by trading a separate challenge, if that makes sense.
Yeah, I've never thought of that. That is very smart.
But you're risking, do you know what I mean? You're actually risking half compared to...
No, I agree. I think, what's your thoughts on like recycling accounts? So we spoke about trading in phase 1 and a phase 2, but once a trader's in drawdown, their psychology goes out the window, and then they're just slowly trickling back. And the one thing I hate hearing is that they're reducing their risk once they're in drawdown. I don't understand that. Like when people go, I'm down 5%, so now I'm only going to risk 0.5% so I don't blow it. It's like, whatever. But what's your thoughts on recycling accounts? So for example, you've got an account that's down 5%. Instead of trading that constantly and trying to get that back up, go into a new account and then trade in different setups between the accounts.
I always like the idea of having multiple challenges, not necessarily like, obviously, like when I have multiple accounts, I normally trade them just completely separately and have one that I focus on. If that blows, I focus on the other one. So it normally goes, like I said, 2% risk on this challenge. If that fails or wins, doesn't really matter. That's its first trade done. then I'll do another challenge, 2% risk on this. And do you know what I'm saying? So that's normally how I go about with that. So I do think having multiple challenges isn't a bad thing as well. Also takes the pressure off that first account. I think the more pressure that you're on in that phase one, the worse. Because again, you're starting to think that's actually a live account. It's your money when it's not. But in terms of managing drawdown, for me, it's very easy from probably our positions to say, oh, we can just lose the account, because we wouldn't care if we did lose the account. Like I said, it's less than what I'd actually lose on the funded account. But for someone starting, like I speak to a lot of people, and I've got to train in their psyche to the point where they look at the account for what they've spent on it. So if it costs them 200 quid, 300 quid, and I say to them, like, can you buy that again next week? Can you buy that again next month? And they're like, yeah, easily. Like, I'm like, so why are you stressing out so much about being 5% drawdown on a £300 account or a £200 account?
I think it's less about money and more about their ego. I think people have like an ego where they think they're a really good trader and they can't admit to defeat. You know, you kind of have to look at an account and go, look, it cost me 300 quid. I knew that investing into that account would potentially be a risk, right? I'll lose the money. So it's a case of,
really high risk.
Massive. So it's a case of get rid of your ego and start again. Question for you on this context. Would you prefer a 100K account or two 50K accounts?
If I only had...
If you was a normal Tom, Dick, Harry and you were working a normal job, what would you pick?
It'd be 250Ks over 100.
Why?
Just because you've got twice the chance. So if you obviously, if you can get one of those accounts funded, let's say your first one you fail, but the second one you pass. On the 100K, you still fail the first one. On the second one, you've got 50K funded, 1% payout. You've made all your money back with the refund, made more money, and you've got a 50K account to trade. It's the same approach. That's how I do these road to a million so quickly to a degree. It's because, I mean, luckily the last month I wasn't even trying to do it, but I had a really good period in the month. So didn't really blow that many accounts. But if you watch the first one, obviously didn't reach your target of $1 million in funding, got 800K.
Still amazing.
Yeah, still decent. But obviously I blew accounts in the process as well, blew challenges. But I said for me, I'm happy to, if I wanted to, commit 10K to challenges, knowing that I'd get at least 2 mil probably in funding from that. But that's kind of like me accepting that. And I think one book that I'm rereading at the moment called Best Loser Wins. It's really good in terms of understanding, like, as a trader, it's not about having that ridiculous win rate and winning every trade and passing every challenge, because I'm telling you now, there's no trade in the world that passes every challenge, unless they're the prop owner, basically.
That's true.
So if I'm okay with losing a challenge, you're okay with losing a challenge, the best traders in the world are okay with losing challenges, then why, as a new trader, should you be passing every single challenge?
I agree. You have to lose to win. Like, you have to take that risk. Touching on your personal life, then, you mentioned a book. So you're working and developing yourself outside the markets as well? Yeah,
generally. I mean, I'm quite heavy, obviously. The reason why I mentor, like, one-to-one more than anything, is because I felt that there's a gap in education within trading, where everywhere you're looking at, it's all just like a mass sold course, sell it to as many people as possible, and kind of no accountability, no support. I definitely didn't feel like I got that from the places that I learned from. I mean, for example, when I got on the leaderboards of whatever, I had an interview with the guy that I learned from, and that was the first time I spoke to him. And it's a very expensive course. It's a very expensive investment. Like I said, I couldn't even buy it. My girlfriend had to buy it for me. I felt like the best way to get people results is actually me personally speaking to them. So obviously that takes up a lot of my time. I probably have, I mean, she'd know better than I do, 10 plus calls a day, 2 lives as well, where I'm spending a lot of time with the people that I speak to.
Sorry, go on.
With the people that I mentor. And I feel like that's like, I mean, it's a big commitment on my end to do that with people, but it's what gets the best results. We've got 150 six-figure funded traders, and we've changed people's lives. And I feel like that is almost solely due to the fact that a lot of it's more accountable. Because if you're looking at trading as a lot of people try and do it from YouTube, and I'm sure there's some traders that can. Very, very select few. I'm not one of them. But let's say you're watching a boot camp, or this guy that everyone else has access to. Every single person on the internet can go and watch that content as well. To be in prop firms in specifics, to be a successful prop firm trader, you have to be in the top 1%. Yeah?
No, I agree.
Top 1%. So if you're going to be the top 1%, how are you going to be the top 1% when 100% of traders have access to the exact same information you're getting?
Yeah.
And none of it's personal to you.
Yeah, I agree and disagree. I think it's individual. So I've known so many traders around me, and there's one guy that mentors, and then there's two students, and he's taught them both the exact same thing. One's profitable and one's not, but they learn the exact same thing. So in my mindset, it's more so your background, your discipline, your psychology, everything to do with that. Like if you're in a trade and you're running a 3-hour, are you going to close it out, or are you going to let it carry on and trail stops? And then the other guy might go, right, I'm just going to do the textbook, and then when it hits that order block, I'm going to close out. It's very personal. So I think YouTube can be useful to guide you and build a foundation, but then it's up to you to be profitable.
Yeah, I mean, I completely agree. You've kind of actually taught, same point, is that like you can take some information, people will view it differently, but to get the best results out of each individual, someone who's already done the whole process, gotten to that stage you're looking for profitability-wise, if I'm reviewing someone's trades, I'm seeing what they're doing, what their personality is like, then I can adjust their trading or give them the solutions more so than the next guy, because the other guy might be perfect. He might have understood from the videos the strategy, he might be very disciplined, very patient, and the other trader might be someone who might be awful gambling mentality, etc. So you need to treat them completely differently. So that's why I'm saying, for me, I would rather spend my time individually with these guys, trying to find what the best solution is for that person, rather than trying to sell like a mass sold course or something like that, because generally that won't get the best results. So that the question was, what do I do in my spare time?
We completely
most of it is that. Most of it is just me.
But more so, what do you do in your spare time to build yourself as a trader for your own trading? Like you said, you read books. Do you listen to any podcasts? Are you watching any YouTube videos or?
A lot more so, and I think a lot of people do this. Like when you're in that like break-even stage, like there was a lot more work that I put in personally. I look at mentoring for me as like my own education as well. I'm learning more about the markets from almost my students.
So revision.
Exactly. So I can't say things to a student. For example, this Road to Million thing that I've just done. I talk aggressively about my risk in terms of like my funded approach. It's like one of my main things that I teach people, and I can't just say that and then go and start challenges and do 0.5% risk or do 5% risk or something like that. So what I'm evidently showing in the challenges is that I'm exactly doing what I say I'm doing. So my risk, like I said, if you're looking at, I don't know, I won't name the prop firms, but if you look at each of those accounts in that series, you'll see the exact risks I share, my risk rewards, the amount I win, the amount I lose on trades. And it's exactly to a T what I'm saying I'm doing. And the thing is that I can't teach people something that I don't believe in or that I'm not actively able to do myself. So that's why I think it's pretty important that when mentoring, I'm looking at like as me in a mirror too, but just like kind of talking to the other person as if it's me when I was younger, when I was unprofitable. So that is like just complete revision. So that's one really big way, well, probably the biggest way that I improve my trading consistently. And sometimes there's people that are a real challenge, or it's really hard to get into the next level, or I don't know, they've come from a completely different background in terms of the way that they trade or the concepts they use. And maybe I need to adjust. I need to maybe they want to keep trading a similar strategy, and I need to almost learn their concepts, because it's not always a one-fits-all system. They might not like the strategy that I trade, but they still might want the psychology, the mentoring, the funded approach, that kind of stuff. So there's always things that I'm learning in that kind of front. But other than that, spare time, I just play golf loads, really. Golf. I don't know. I don't really know. It's fair.
Did you play any games or anything like CS:GO or?
Nah. I've recently brought my Xbox from my mum's house to the flat, like literally last week, and it's like dusty. I haven't touched it for like 2 years. I bought it and I just play. I've played it like 3 times. I don't know. I used to be big in games, but everything I used to do, I try and not do because I wasn't the success. Well, I wasn't successful when I was the person that I used to be. So for me, anything that I used to do, I try to stay away from as much as I can.
Yeah, I agree. I think it's good to wind down though, because if I'm looking at a chart all day, every day, and I'm in calls and I'm, doing X, Y, and Z, it's kind of like I want to just relax at the end of the day. And a lot of it is communicating with your friends. I feel like throughout my journey, I lost connection with my friends. So playing games and going out and playing golf and, maybe going to the pub or going to a restaurant, you're socializing, you're kind of taking your mind away from the charts. And that's really helped me, whereas other people might go, I just see it as a distraction and I just want to lock into a chart. But I think for me, going and actually enjoying your life and socializing with people is so important. So then when you come back, you're refreshed and you've got a clean, head on you. A lot of people, what I used to do is on like a Friday night, I'd get back from work when I was working my job, I'd trade the New York session in the afternoon, And then all night I would just be constantly backtesting. I'd be constantly like looking through my trades and journaling. And now I'm at the point where I'm profitable and I can trade freely every single day. Now I can enjoy my life and socialize. What do you think about people, I guess once they become profitable, do you think they should start winding back a bit or keep on the board? Do you think they should start seeing friends and going out to the pub and things like that? What's your thoughts on that?
It's a good question. So, I mean, with people that I teach, the first question that I usually ask them is like, why are you trading? Like, what's the why behind you started trading? And with most of them, it's the same answer pretty much every time, to be honest with you guys. It's time, location freedom, not answering to a boss, not having to look at the price tag when they're buying things.
Yeah.
That's pretty much it. Some people have like extreme ambition, so, like in terms of they want to make millions. Some people have like literally they just want the freedom.
Yeah.
But all of them want the freedom. Now, what I say to people when they get to the stage, for example, people that I train to get into a funded account, they might get to a good size payout, and I know that they maybe have traded a bit too much than they should have done for their first payout, etc. And I'll say to them, and they're kind of almost like really like wanting to trade the account more than they should be. So I'm saying to them, why did you start trading? What was the reason? Was it to sit on a screen all day, every day, trying to trade everything and anything? Or were you using trading as a tool to create time, location, financial freedom? So for example, the way that I trade is London session. So normally I'm done with trading or I won't execute past 10. If I'm not executing past 10, the rest of my day, I can do whatever I want.
Yeah.
I still spend that kind of working hard, most of it. But obviously, for the people that have gotten to that stage that I've taught, I'm saying to them, why do you need to spend all day on the chart? This is what you're doing it for, is for that location time freedom. So, yeah, I mean, equally, the other side of it is, I had it in my head, but I've forgotten it now.
Maybe about the pub? Drinking, going out?
Oh, no, I know. So with trading, you can't, as you're going to know, you can't work hard at it. You can't force opportunities on the market generally. And if you are, they're going to be lower quality and you're probably going to be losing yourself money in the end.
I agree.
So you can't work hard at trading, but you can work hard in other avenues. For example, I can work hard with my mentoring, I can work hard with my business, I can work hard on different aspects, social media even. Like you can work hard on content. So for me, I don't feel like trading, I don't feel like I'm working hard when I'm trading. I feel like I'm just doing my, like, I don't know, it's not.
It does get to that point.
Yeah.
And then you start venturing into social media, then like I work for Quant, so it's like people are like, oh, you're a trader, but you work for Quant. It's like, well, once I took a trade on the train this morning, and then now I'm like, what do I do for the rest of my day? So now we're doing a podcast, you know. So, but I think if people are saying they want freedom, and people are saying they just want to earn $2,000 a month and they want to live freely, it's like spend an hour on the chart and then walk away. That's as simple as it is. But people just spend all day and they're like, oh, I'm not going out and doing this, I'm not doing that, and it's a sad life to live. And I've gone into that rabbit hole as well.
Yeah. Oh, mate, same. I mean, you've got to realize, like I said, it's just a case of like working smartly. Like you don't need to. I think if you can, I believe in my dad actually used to say it to me quite a lot, where he'd say like, Rob, you're a bit of a jack of all trades, because I never knew what I wanted to do really, and I didn't want to go to uni. I was good in school but not amazing. I was good at sports but not amazing. I was good at a lot of things but not like amazing. And he actually used to always say to me like, Rob, you're a jack of all trades, master of none. And I was like, right, cheers, Dad.
Yeah.
But
I hate that phrase. I think that's a bad phrase, but yeah.
But for me, like I kind of took that, and with how I was learning how to trade initially, I'd look at every pair. Initially, I'd look at anything that was volatile. Initially, I'd try and learn every style. Initially, I'd try and trade every session. And I realized if I'm going to be, because I don't, like most of these guys, quant traders, institutional traders, they're going to have like a risk team. They have specific desks for specific pairs. They've got as much like possible advantages that they can have to be specific in one thing. And as a retail trader, in my opinion, your edge can be defined by how specific you are, in my opinion, for me. So I found a lot of success being really specific to one, maybe two pairs, but for me it's two now, in one session with one type of setup. So for me, that's London session reversals. And that's just what I've traded. You can go back and see my trades for years and years, and that's just always been my best type of setup. Yeah. So for me, there's not much reason to try and diversify to add to that. A lot of traders, they'll see some sort of success in one type of model and instantly move to the next one, thing that's going to make them better traders. But a lot of time it takes them a step backwards until they've really perfected each one. Obviously it can get you to better rewards, but for me, I'd rather just stick to my 7 to 10 and enjoy the rest of the day doing something else.
I agree. I think a lot of people they overcomplicate it. Like you said before that you don't trade fundamentals. Well, you don't as much.
Yeah.
Why don't you trade fundamentals?
I think it's pretty hard at the moment with like tariff news and when he's making announcements, and even like just standard economic data. So if you're looking at, I don't know, let's say CPI, it's moving way less in comparison to what it would have done last year. It's a way less as big because of what Trump's announcing, like at 9 p.m. UK time to obviously there's a new tariff on China or something like that, and they're making the big 100 pip moves, and it's like, well, okay, how am I going to use the standard economic data that I'd usually use? It's a little bit harder to read at the moment, so that's why I said at the moment I'm not as big on it. But yeah, I mean, it's less of it seems like a lot less around like standard data that you'd normally read, like interest rates, for example. Instead of that, right now, it just seems like what who's announcing a trade deal with who, that kind of stuff. So yeah, it's a little bit different fundamentals, I guess, but still obviously look into it. Just the way that I trade is very like rule-based initially, and then any discretion that's added on is usually just higher time frame analysis.
Okay, cool. Can we touch more into the subject of your strategy itself? Do you want to go through a chart and kind of show the viewers how you'd break down a chart top-down analysis and maybe show a trade that you took recently? Or?
I'll explain. I did this one live. It's probably my biggest trade ever. It was on a personal and 2 fundeds, but I'll show it. It was last Monday.
Right. Let me start. Right, so we'll talk about your strat. If you show us a top-down analysis, like let's say, for example, you're approaching a previous trade that you may have took, show us everything that you would do if you was actually taking that trade again.
Cool. So yeah, I mean, I took this one live anyways, but let me go for it. It's one of my only Class A's of this year, to be honest with you. Class like AA or A stars probably better.
So you mean like the best setup that you could find?
Yeah, it was a nice trade. It was Monday. What this is?
And impressed. Yeah.
There we go. Cool. So it was definitely not that far back. I don't know what I actually use laptop. So this might be way slower than it would be normally. It was here, I believe. Cool. So higher time frame wise, I was basically bearish on GU. Main reason being is because the week before this started, so last week started, we had a slight cut in interest rates for the pound. So I think it's 4.5 to 4. US stayed the same, and we also had a trade announcement as well between obviously the US and the UK, and I believe it was more beneficial for the US. So I was expecting GU to have a little bit of a sell-off. DXY as well massively needed some sort of retracement to ideally find IRL to ERL, or just a good POI to start reacting from, because we massively sold off on DXY, I'm sure you probably know as well. So basically, we started the week with this flat body low. This is higher time frame analysis, so this isn't my strategy to a T, trying to find the lines for you. Here, so we started the week off with a flat body low here. So for those of you that don't really know, I look at that as inefficient price action and a clear area that price is going to be drawn to take out. So I'm not going to have my save templates, are you?
I hope not.
So I'll just use basically this red line as a target. Then we also had a new week opening gap between here and here, and yes, it's probably a little bit ICT for the higher time frame, but using that as a POI, something to tag into. I usually use the fib actually, because we quite like equilibrium from here.
Okay, so you're using a fib at the new OG to find the equilibrium and then waiting for the market to tap. Why equilibrium?
I just look at it as a whole POI, but it's just, I just don't know why. I just use fib. I generally look for it to retrace even to the 50%. I don't have a specific point. I just use that as a POI rather than a square. I don't like the rectangle as much. Just like I think fib looks pretty clean, or a gam box sometimes. Okay, so yeah, it's just to identify that's a POI, that's a new day opening gap or new week opening gap, rather than it's a POI such as like a fair value gap or a order block, something like that. So basically, like I said, had this flat body low here that we could target. We had a clear POI in this new week opening gap. So higher time frame, quite a lot moving or in favor of it going short, which was also my fundamental bias as well. So then I'd go down to the lower time frames, and this is more specifically strat based. I'd look on the 5 minute. Oh, 5 minute. Oh, 5 months. Okay, let's find this. Oh God.
If you like swipe up the 2 fingers, it will work.
Oh yeah, there we go. Where was it? It was like 14th of May or something like that. There we go. So, yeah. Cool. So I think you asked about indicators earlier.
Yeah. So we'll do that.
Okay.
So you're not using any indicators. Why?
Generally, I mean, Naked Forex is one of the first books that I read around trading, and it's a big believer in indicators can't really make a trader. So generally, it's lagging, or his psychology is that it lags behind price action. If you can just read price action for what it is, you don't need an indicator to tell you what price action's done, and it's going to tell you a little bit later anyways.
Yeah.
So generally,
my favorite indicator is EMAs.
Okay.
Have you ever traded EMAs?
No, the only indicators that I do use is the Asian session by Nico, the ANSHI, FVG, and sometimes it's called the ICT daily and weekly candles, so just basically showing higher time frame candles when you're on lower time frame.
Oh, I've seen that, yeah.
Yeah, so I don't actually use the indicators that I can completely trade without them. It's just easier to see than me drawing it for every day.
Yeah.
So it's basically just for me identifying Asian session and where fair value gaps are. So
yeah, I think a lot of people confuse indicators with that they're actually for taking trades. They're just for bias. They're just for kind of giving you a bit of guidance on what you want to already see. With trending, with EMAs, I like to see the trend continuation with EMAs. The EMAs just show an easier flow for my eyes in a way. Whereas people will go, oh, it's rejecting the EMA, I'm going to sell. And it's like, no, that's not the reason you use EMA. So,
yeah.
Okay, it's cool. It's cool.
That's nice. So, yeah, in terms of, I don't actually know where the indicator is here for some reason, but we'll just do it.
This is full screen, that's why.
Okay, there we go. So I would use Asian range by Nico. Oh, it's already started. We've already got that on. That's good. And I have it stopping at 6. So I'll change the settings just for now. I have it 7 to 1 on here. So I have it like so. Basically, obvious draw of liquidity here, structured liquidity too, without even having to draw Asian session. You can clearly see a build up of liquidity. Our POI on the higher time frames here, a clear target at the lows here as well with the flat body lows. Also, the only off-putting thing with this trade was the fact that we kind of created a little bit of a sweep pre-7, pre-Frankfurt Open. So obviously, some people actually took a trade that were trading pure MEC, which is the most basic version of our strategy. They took it on EU. I live traded for my Discord, so I was basically talking through why I wouldn't have traded that. Reasons I've already talked through high time frame wise, fundamental wise. So what I looked at, and I looked more so at the 1 minute.
I don't have premium. My bad. I don't pay for premium trading view. It's a waste of money in my opinion. But
okay, well, basically I won't go down to the 1 because it's way clearer on the 1. But price takes out Asian high. You get a new low put in here, a new high. I use wicks to break a structure anyways, and I have to have body closures for change of character. So here, technically we had a body closure beneath the low. Here, it's very unclear on the 5, way clear on the 1, but this is just basically showing higher high, higher low, higher high, change of character with a lower low. And then what I do from there would retrace to the EQ. Equilibrium, so 50% of that swing, which we've got quite a nice Fibonacci retracement actually.
Thank you.
And then typical strategy would be a 2R. Take the highs, that's where the trade would be invalidated. And then for me, I held for quite a bit longer. So I was looking at previous Asian lows here just as an added area of liquidity. For me, the funded accounts I took the trade on stopped here. So there were just 2K payouts. And then my personal account I took a little bit further, and that's one of my biggest trades probably ever, to be fair. So yeah, that was the strategy, was the lower time frame stuff, higher time frame backing being the analysis and the fundamental backing as well.
Okay, so summarize, it's a new week opening gap. You wait for a swing of liquidity from the Asian session into the new week opening gap. You then look for maybe manipulation into that new ARG, then a break structure towards the downside and then pulls back up to equilibrium, and then you're looking for distribution towards the downside. Pretty
much, yeah. I mean, this is obvious AMD, but in terms of to break down pure mech, pure basics of the strategy, it's 7 to 10 kill zone, 5 minute sweep of liquidity, a session liquidity, a 5 minute change of character, lots of people call it break structure or market structure shift, retracement to EQ 2R. That's basic mech.
Okay.
And that alone will get you about a 40 to 60% return on investment every year. Well, most years at least.
Yeah.
So go ahead and backtest that if you want.
And then just one question on to do with this, TP wise. So you said about your SL, you keep your SL just above the high. Do you allow a little bit of slippage, or do you just keep it standard?
Generally, I have this thing around whole numbers. Generally, if it's a whole number, I'll give it a little bit more room. So in this case, it's exactly 1.3000. So I'll give it normally a couple of pips extra room.
Okay.
I've just it's completely personal. Like from my own experience, I just notice when there's a whole number and my stop loss is a whole number. It's like, obviously, if you look at and identify liquidity as a key point, everyone puts their stops usually at a whole number.
Yeah.
So if everyone's getting stops out, if there's going to be like a total soup, or it's just going to take out more structural liquidity before the actual move, then the likelihood is going to take out the whole number, because that's where everyone's going to have those stops. So I always try and give myself a little bit of extra room, especially if it's at a whole number.
Okay. And then final, your TP. What makes you decide your TP?
So generally, like I said, fixed, like back testing wise and mech wise, would be 2R, just because it's just the easiest and easy way to be profitable from it. But for me, especially in challenges, I'll normally target at least a 4R, mainly so I can pass a challenge in one trade, to be honest with you.
Yeah.
2% risk. Most of them have 8% target, so very easy to trade. Obviously, a lot of them have now minimum trading days, 0.5% risk, or consistency rules.
Yeah.
So if that's the case, then I'll probably drop down to 3 or 2. Or just even trade 1% potentially, or 1.5% instead of full 2, if they have those conditions in place. But obviously that's on the trader to do their research into the prop as to what rules they've got.
Yep.
They shouldn't be changing it for each individual trader. If I'm trading differently because, if I trade the same way but haven't looked at the rules for each prop, then that's more on me than it is the prop, to a degree.
Okay, so it's contextual with the prop as well. And then, what was I going to ask? So do you ever put stops at break even or trial stops at all?
In funded accounts and personal accounts, a lot more so than on challenges. On challenges, I'd rather lose the account, or not lose the account, but lose a trade and be okay with losing the trade, and knowing that if it hit full TP, I would have passed the challenge.
Yeah.
On a funded account, capital preservation is a lot more important. That capital is actually yours to trade to a degree. So if I've got a 200k funded account there, I've got 20k to lose. If I had 20k in a personal account, I wouldn't want that to hit stop losses.
Yeah.
I'd be more content with it hitting break even, having a slower game.
Yeah.
And it's the same process with funded accounts.
Okay, brilliant. That's well, thank you for showing us that. So you mentioned you don't put stops to break even on a challenge, but you would on a funded because you're preserving your capital. Does that help with your psychology? Can we talk more about your psychology in regards to the trades that you're taking?
Yeah, so generally, like, obviously every trader goes through good periods and bad periods, and obviously how you deal with it is down to the individual, and that's really what makes a good trader. So it's actually a golf saying, which I say quite a lot. A good golfer, or in this case, a good trader, is not determined by how good is your good, it's how good is your bad. So if your bad is really bad, it will completely outweigh your wins and your consistent profitability. If you're consistently profitable, then on the 1 month where you have a losing streak, you lose it all, then you're not consistently profitable.
Okay.
So as a trader, I believe you absolutely will go through bad periods in the market. And even if you're 5-10 years experienced, that still happens. So all you can do from that is create a higher high rather than stop. I mean, a lot of traders will get to a point where they've seen a winning streak, then they'll have the first losing streak, and they'll go into, like I said, create a higher high, and then they either let that become their stop loss to a degree, they quit at their first higher low, they quit, and then obviously it's a lower low and you're out the game, or you continue, you stay resilient, and you basically break past it and create a higher high. That's the way that I look at it long term. Is I know that I'm going to go through losing streaks, I know that I'm going to go through winning streaks. So it's basically, my management is generally making sure that when I am losing, I'm following every part of my plan. I'm not changing my approach because it's losing. I see a lot of new traders go through their first losing streak and instantly try to add 50 million confidences, try to add or completely change strategy, and you're never going to see any sort of consistency psychologically wise or just trading wise if you're constantly hopping strategy. That's the main thing that I see with newer traders as to why it takes so long for them to get consistent. Another thing being, I can
ask you a question.
Okay, go for it.
Let's create a scenario for you. So you're just getting into trading, you're kind of slightly just on the brink of getting profitable. You've got a 100k challenge and you're down 5% for the week. Leading towards the weekend, how did you used to deal with that psychological warfare in your head? Like, how do you carry on from there? How did you carry on your journey from all the losing streaks that you previously had?
It's a good. I wish I could answer it without having my now bias.
Yeah, let's put in a scenario where you don't have your now bias, because I understand you're losing the kindest way, right? Yeah. But back then it's like the world's ended. So imagine you're back there.
I kind of like. Again, with funded accounts, like I was already like full time, so I always had really the same psyche with funded accounts. I always had that, like, I actually don't care if I lose it, it's 500 quid. It's like what I'd risk on maybe when I first started my personal account, when I was going higher risk, etc. Not first started, but you get what I'm saying.
Yeah.
So necessarily, like in drawdown, how I deal with drawdown on funded accounts, funded challenges in specifics, is just understanding what the actual challenge is. With funded accounts and personal accounts, how I deal with it massively affects me way more on a personal account than a funded account, 100%. Yeah. So normally how I deal with that is kind of, one, look back at my testing. So if obviously, let's say you strip things back, go back to the mech style strategy, go into my data and see, well, how many times does it go through losing streaks? How often are those losing streaks, and how frequent and consistent are they, like 4 losing streaks or 5 losing streaks or 6 losing streaks? Then I'll go back and look at my recent trading and I'll say, have I taken more than I should have done based on my testing? If that's the case, then I need to find something that I'm doing wrong consistently. And if there is something, then obviously I'll make a huge change. If there's not, I'll try and go back through it and see a trend in my losers. If there's not, and that there is sometimes it's new markets, like at the moment we've just experienced, I mean, we're both pretty much the same age, I think.
Yeah.
We haven't experienced Trump's markets like loads, maybe a bit at the start.
I did dabble when he
Yeah.
initially was in power, but with the tariffs and everything like that, market changed constantly. And I think what a lot of people struggle with is going, right, it worked last month and now it's not working. And then they go, oh, trading's a scam, I'm done. But getting over that process is a very long journey. What was the question I was going to ask?
I think just to bring that up as well, I think like you've got to treat yourself as a novice at all times. Like you can't master trading, in my opinion. You can't, like, there's no master at trading, because you can be an extremely good trader, but the best traders are the one that are adaptive and understand that they're not perfect and are okay with not being perfect. Because if you're a master of trading or the best trader, you'd win every trade. There's no one in the world that does that. So for me, it's like if there's no one in the world that can do that, there's no world where you can be a perfect trader. So what's the closest to that? And it's becoming as self-reflective as possible. It's going through and understanding like you're not going to be perfect and being okay with that. And then, okay, if you're going through losing streaks, the main dominating factor as to why traders fail is because they either don't follow their plan, which they know is consistent over years, or they quit. They just quit as soon as it gets hard. And that's just psychology. That's just not being resilient. That's not to do with having an amazing trading psychology. That's just being a quitter. And that's just being someone who can't get through stuff that's hard.
Yeah.
And I think that's the main reason as to why a lot of traders can't get there, or they don't want to help themselves. I speak to a lot of traders and I see a lot of bad tendencies in people. And I think a lot of it is due to whatever's happened in their past or the type of person that they are coming into that. But I always think there's a way to profitability, and it kind of, like I said, it needs to be individual to that person.
I agree. I think the biggest thing that helped me was data. Data is your best friend. Your previous back-tested trades or forward-tested trades is so important to review and then go, actually, I am a good trader, I'm just going through a bad period. So how am I going to develop on this and journaling? And I think RR was the biggest thing that changed my trading from being not profitable to profitable. I was losing a lot more than I was winning, but my losses were drastically big, like the phrase that you said earlier. So I think for the people out there, having the smallest losses possible, but the biggest gains when you're right will 10 times fold your trading, I think.
100%.
That's a bit one.
I think I think like when I normally hear, especially when I learn, I listen to a lot of traders, and the edge that they're generally looking for is not in a win rate. A lot of new traders that I see always looking for the higher win rate because they're not okay with losing. But the money is usually in the risk to reward. If you can figure out that risk to reward and get a bigger risk to reward, or understand when your trade should be going to a bigger risk to reward, letting your winners win further, and cutting your losses short to a degree, that is how you become a better trader. That's what it's really about. The basis of executing a trade, I mean, what I see, and I notice, and I know of it myself, like you get, and it's the same with gambling. If you get the dopamine hit when you place the bet, not when it wins or loses. So it's the same with trading. If you're addicted to placing the trade, how are you going to increase the quality? Because you're not focused on increasing the quality, you're focused on placing the trade.
Yeah.
So you've got to understand that and understand your own personality and what you're like. If you're someone that's addicted to placing trades, okay, why are you like that? what are you actively going to do to stop that? Are you going to get any sort of accountability? You're going to, I mean, for me, I had trading plans, graphs all across my room and rules like everywhere. So I couldn't do it. And if I did, I'd go for a run or do something painful that I didn't want to do. I literally did it in the Road to Million series, and I got a payout from it. I overtraded and got a pretty big payout, and I was like, I shouldn't have done that. Like that was against my rules. 4 funded accounts. For challenge, it would have been fine, but it wasn't a challenge. It was a funded account. So went on like I mean, 5K is a long run for me. But yeah, that's one way that you could deal with it, I guess, being really harsh on yourself to a degree initially.
Yeah, I think being harsh on yourself and punishing yourself is really important, because a lot of people would do bad habits and they'll go, oh, it's fine, like this is completely fine, and then they'll just carry on and then do the bad habit again, and then they end up quitting because of that bad habit, whereas they should have resolved it from the first. And that's why I think listening to profitable traders and understanding their history is really important. I mean, one big thing that a lot of traders struggle with, from what I see, is revenge trading. So they'll enter a position and then they'll just go, no, I am right. My ego is like massively big. And then they'll go, I want to short gold again. Did you ever experience much with revenge trading?
Sure, I'd probably say that was one of my... The 2 worst things that I had personally was probably revenge trading initially and having a win and leaving the win for the win. So I still probably am like it, to be honest with you. That's why I'm so strict with myself on funded accounts. Like that's why I've had to, like I said at the start, like treat them like it's just like 1% you need. You don't need to go for 10% or something ridiculous because it's 100%. It's obviously an ego play. When you hit your winning trade, I deal with that probably worse than I do with losers. Generally, when I lose, I'm definitely now, maybe not in the past. Like I said, revenge trading a bit more in the past, but I feel like that just comes with experience, with reps on the charts. You realize that you're definitely not right 100% of the time. So when you're wrong, the longer that you trade, you realize you're just wrong, and it's okay. That's why you have a stop loss. It's to invalidate that trade idea. So I think that's more down to experience, revenge trading. But in terms of winning, like I said, that's where I probably still, to a degree, have to check myself a little bit. Like I've had accounts where I had 8, but I had like 3 big payouts in a row, and the 4th one, it just had to be bigger. I actually had like a 15k in profit in a funded account, and I just couldn't let myself just let it be a small payout, or even 15k, because I felt like I had to prove a point, and it was being filmed, and you feel like, I don't know, if you constantly look around and even compare to yourself, then you never actually progress as a trader, because it's not linear. You don't always just go up and get bigger payouts every single time and bigger funding and all this stuff. It's going to be like that, and sometimes like that, and then you have to bring it back up, etc. So my point I'm trying to make is, if you're constantly trying to do better and better each month, it's not like that in trading. Generally, you can have the best month of your life, break even the next month. Like it's not linear. It's not like if let's say you run a company and you do, I don't know, sales or marketing, you've had a really good ad performing, or you've got suddenly a really big clientele, like normally you would have good months in a row. And it's just, well, trading, you do have good periods in the market, but it's not always just like that.
Yeah, I agree. It's a blessing and a curse with the mindset of trying to get bigger and bigger and better payouts and making that number big, especially with social media. It's hard to go. It's hard for me to post a story on my social media and go, oh, I just made $2,000 payout. And it's everyone's like, oh, it's only $2,000 though. It's like, bro, but like I worked, an hour for that? In retrospect. But I think my advice on that, on top of what you said, is just take everything that you can from the market. You either take nothing or lose a lot, or you can take that small little crumb that maybe... I see people getting payouts for like $500, and it's like they might have done that every single day on every different prop firm throughout the entire week, and then they're making a lot of money. So my habit now is just taking not as much as I can from the prop firms or from the industry, is taking what I can, placing them trades, protecting my capital, and then just taking what I can, put it in my pocket and go again. That's what a lot of people forget as well. You get to reset the account.
You've literally got a fresh funded account every time.
So I've seen my friends be up like $4,000, and then they're trying to compound it and grow it, and then 9 times out of 10 they breach the account. And it's like, just take that money, put it in your pocket, maybe invest it into other challenges, or put it into your cash account, whatever it may be, but then start again fresh, because then you might go on a losing streak, and that losing streak's just wiped out that $2,000 profit that you could put in your pocket. Yeah,
I think people overcommit. I see people get their first funded account and just instantly look at, like, obviously they've just made 15%, so they're going to be over the moon and very egotistical. When they've gotten to that stage, they think, right, I'm going to make 10k every month just from this account, and like I'll scale it eventually. But the mindset that you should be having is, right, let's get a refund on this account. Let's make it risk-free. So you're not actually trading with any like of your own capital, if you know what I'm saying. Then from that, take consistent payouts. And then let's say you're getting 1-2K in payouts. And that pays for 3-4 challenges, and then scale from that. Your way of making more money is through more capital. It's not from having high percentage gain.
Yeah.
So that's what a lot of traders, like I teach in particular, like, oh, sorry, keep bringing up teaching. But I see a lot of traders just going for a ridiculously high percentage return. I get messages all the time, like, what percentage are you hitting each month? And I'm like, well, on a prop firm, it's generally like 1. Like, I'm not going for, I get profit and then I leave the account. If they don't have minimum trading days, it's free money in my opinion. And as soon as you're in profit, it's money. Like,
I agree.
I mean, you can, basically.
I don't know if we're allowed to talk about it, but my payout, like today, was $2,800, and that's on a 200K account, so it's 1%.
Yeah.
But like I said, that's someone's monthly wage, which is ridiculous, you know.
Exactly.
I talked to, I don't know, my cousin about a payout that I've just got, and then he's like over the moon, and then other people are like, oh, is that it on a 200K account? You should be hitting like 10K, and it's just like, sometimes in your trading career, you have to come back and be like, okay, we need to think from a normal standpoint and how I can actually use this capital, and then go again.
It's social media is like, I almost look at it as like, I don't know what the word would be. It's very like mind numbing in the fact that you can compare yourself to people that you shouldn't be comparing yourself to. And it's like, just because someone's had a better month, or they've taken that trade, or you've missed out on that trade, or you've had a worse month, like, there's no like better trader to a degree. You might both be the exact same level, and I don't think it's necessarily like you're at this level, you're at this level, you're at this level. You get what I'm saying? Like, I think it's more a case of like how much you're okay with not being first every week, every month.
Yeah.
Because social media can get you into that mindset of like, I need to be hitting this now, and realistically, I know most traders won't be profitable for 2, 3, 4 years even. So it's a case of like, if you're constantly comparing yourself to traders that have gotten really profitable in a year, they haven't even experienced like a whole 4-year cycle of a market. So how can they be like, you don't even know that they're going to be profitable next year?
Yeah, I agree. And it's what a lot of the time, it's what people do with the payouts as well, which is like, you don't really see. So someone might get a payout of 10K, but then they might go put it all on red. And then it's like, oh wow, he's made that 10K payout and I'm only making this much. And it's like, but he's just wasted it, or he's bought a Louis Vuitton bag, or this or that.
Yeah.
With me, it's like, I either reinvest it back into props, into my cash, or I either put it into my business. Like, let's say, for example, we need to put a bunch of capital into my business. We go, okay, I've made X amount from the prop firms, I made X amount on my cash, so then I'll put that into the business to grow the business then. And I might have a month where I make 30 grand from the business from a 5K payout. But people are going away and buying a Louis Vuitton bag, and then they'll look at that 5K payout and be like, oh, that's nothing. But I've turned that 5K, put it somewhere else, turn it to 30. And that's the problem with social media, is understanding. I mean, probably can't discuss his name, but he's made a lot of money from the prop trading space, bought a lot to flex his money, and I don't think now he's like at a good point in his life, because he's spent it all, he's put it all on social media, etc., etc. But that's just a rabbit hole that people get into.
Yeah, it's the expectation that you get from your audience as well. If you're on your phone, like really caring what everyone's saying about you, you feel like you need to get to the next thing, or you need to show a new car, you need to show whatever it is that you need to show. For me, like, I'm not like I don't know, clothes, I used to resell clothes back at school, but I never look at them as like, I really care about wearing like the nicest clothes, whatever. But that's just one good example of something. Return to no investment. Obviously, like I said, I used to try and sell them for a profit, but that was it. Past that, you're just wearing like a depreciating asset.
Yeah.
So obviously, if you're trading and you're seeing yourself as a long-term trader, this is your passion, this is what you're doing for the rest of your life. But why would you not take your payout and use it? I mean, I'm 5 years deep into trading now, and I've only really now started spending any of my payouts on stuff that isn't maybe like trading related. Probably one of the first times, like literally, I think it was obviously I talked about my 20th birthday the other day. 23rd birthday, I remember
coming. 20th.
So it's 20th birthday, obviously 3 years ago.
Yeah,
and it was my 23rd birthday a couple of weeks ago.
Yeah.
And the issue, and this is where I'm finding myself in a little bit of a torn place on, do I keep scaling these accounts? Do I get to like 5-6 million? I mean, I don't know how I'd be able to do that now at this point with scaling.
4.8 million now is cap.
Yeah, like props, it's hard to get to that with different props and ones that you trust as well.
Yeah.
So for me, like obviously it's going to be more scaling the personals, investing in businesses, stuff like that. Crypto is massive for me. So for me, on my 23rd, I was like, right, I just need to actually like realize some of this profit, because at the moment, like I always just reinvest into numbers on the screen, and at the end of the day, it doesn't mean anything. But so that was the one time that I've made like a decent. Well, I've obviously got other investments like retiring my girlfriend. I look at that as an investment. Getting flat. Obviously, we're going to be moving to Dubai end of year, but the one investment was this watch. And that was like my first time, which like, okay, we've gotten this month's payouts. Let's just spend it on something good for a birthday. A little bit. But yeah, that took me. I could have bought this 3 years ago. And I just never did, because what does it do for me? I mean, it's nice, but
it's very
I don't I don't gain anything out of it. If you get what I'm saying, other than a bit more respect in a room, and like if I'm going somewhere. If you get me.
I think that purchase is okay, because it's not going to depreciate in the next year. It's like you said, it's good to when you jump into a meeting or you go into a boardroom and people see things like that. It's like, okay, cool, it's a good investment. But if you pulled up in like a brand new like C43 remapped, and it's just like it's going to lose value. It's completely going to lose value. So of course you've got a lot of experience with a lot of prop firms. What is it that you specifically look for in the prop firms that makes you go with them?
So generally, I'll normally favour a 2-step over a 1-step unless I'm doing a big challenge to hit $1 million in a month or something like that. So generally, what I'm looking for is consistent payouts. So they've been paying traders out, and high payouts as well. So not just your 1Ks, 2Ks, etc., but 10Ks, 20Ks even, 15Ks, 7K, 8Ks. Obviously, I'm not expecting people to be paid out like 100K per payout, but I just want to see consistent payouts. Obviously, I know that can still be faked to a degree, so I would want to see like trader interviews, stuff like that, and make sure that the prop's actually got a bit behind it in terms of the traders are real people. They're not just blokey's mate and they've gone, here's a certificate or whatever. Then obviously you need to look at the rules of the challenge to know if it fits your trading style. So for me, generally, I don't like being in challenges long. Like I said earlier, I'd rather have a lower minimum trading days. I'd rather have a clear target, would be 10%, 8%, doesn't really matter to me. I'd rather just be able to get onto the next stage in a decent amount of time. So obviously, like I said, if I'm doing 2% risk, 2.5% risk, I really only need 1 or 2 trades to be fully passed. If I've then got added minimum trading days, which I completely understand why props do it, and obviously I've kind of maxed out the ones that don't have that, then you have got to look and okay, maybe risk off and just look for 3 winning trades instead of trading off of 1 and passing 3 accounts with those trades. So generally, I'll look for that initially. Other than that, things like consistency rules, I personally stay away from, or try to stay away from as much as possible. How long the company's been running for, amount of payouts obviously given to traders, just overall. What else?
Prices, maybe?
I don't really care massively about the prices of them, just because I know that I'll get it back if they're a good prop firm. So if, let's say, and normally it's a bit of a red flag, in my opinion, if they've got discounts consistently running all the time, to me, it looks like they're wanting more traders in. If they're matching that with really easy rules, big red flag for me. Personally, if I see if they're offering too much, I always feel like there's a line in prop firms. Certain prop firms have it like spot on with the price that they offer, the challenge of the challenge, how hard it is to pass. And I feel like very few props get that right, to be honest with you. Obviously, normally ones that are operating for longer have got it in a sweet spot to a degree. Because as a retail trader, we almost don't want loads of good profitable traders on prop firms as like an individual retail trader, because the bad traders, as we know to a degree with prop firms, they're the ones who are paying us. If the prop firm's not got cash flow from people paying them challenges, we don't make any money. They just go under and we just lose our investment as well. So there has to be a balance, in my opinion. And if they're too cheap, the rules are too easy, you're going to get too many profitable traders. I see this with props all the time. I won't list them, but I've had over $1 million, I think over $1.5 million now in funded capital, where I've lost it due to a prop going under or something obviously completely unreasonable, mainly just them going under. And it's almost due to just because it was so easy to pass and it was so easy to get to that funded account and it was so cheap to get to that funded account. So if I'm taking a 20K payout and I spent maybe $1,000 to get there and it's a one phase and it was super easy to pass, like obviously you're going to end up unprofitable or not unprofitable, but a lot less liquid because people are just actually passing your accounts a lot easier. You have to be a super skilled trader.
So you are yet to trade a Quant, is that correct?
Yeah, yet to trade. Like I think I've taken a challenge and lost it, to be honest with you. But I've not gotten funded with Quant yet.
What's your kind of outsider perspective on Quant?
I base it off of what I hear more so than I do my own research, but there's nothing really pushing me or pulling me from Quant. I don't know how to explain it. Normally, when I see like over marketing, actually pushes me off a prop. A lot of the time, when I just see like that they're pretty consistent with their marketing, they're not doing too much, they're not affiliating with every single person in the world, then I'll normally just trust them a little bit. Because if you look at some of the bigger names, they don't do tons and tons of marketing, but they're the ones that have been lasting for really long.
Yeah.
So that is a little bit what pushed me off initially.
You could see marketing as a good side of liquidity though.
Yeah.
Because if they're putting a lot of money into marketing and they're pushing the company even more, then it could be like, oh, well, they've got a lot of money to spend, right? So then they've got a lot of money to pay traders out, etc. So there's two ways of looking at that, yeah.
Yeah, 1,000,000%. It's just down to my preference.
Yeah.
And with certain props, obviously, I know how easy it is now to a degree to make a prop firm. So generally, like you can see, like we can make a prop firm if we wanted to.
Yeah, I'm
like,
down.
Fine. But one of the main reasons why I've not necessarily gone with you guys more so than I have is because obviously the migration between when you were Ascendex, because I think I had a phase 2 with you guys in Ascendex, and then going to Quant Tekel, obviously the name change as well. Nothing wrong with the name change, but I
you like the name or?
I probably preferred Ascendex a little bit, but
Okay.
Quant Tekel's not actually as bad as I think as it's made out to
It's
be.
quite smart, I think.
Yeah, it's not bad at all. It's nothing too bad. And it's quite different as well, actually, to most props. It's not like everything's called the funded something. Or
the capital. Yeah.
So I like it in that regard. But in terms of like migrations generally for props, like it normally is red flag. Like we've seen it with the funded trader, true Forex funds. I saw the ones I can think of off the top of my head. To be fair.
Talking about them, where are they now?
Yeah, exactly. They are, to be fair, you guys have survived that, so that's a good sign. I'm getting more confident with you guys now. Obviously, the more I've seen, we've got traders that I teach that get paid out with you guys fine, so it's good to see that your payouts process of that is okay. Yeah, to be fair, like there's not much putting me off you guys now. It was just in that period. Obviously, I've been scaling like crazy the last year or so, and in that year, that's when all that was happening. So I was quite keen. Like I'd rather look at a prop that hadn't gone through that.
Yeah.
But now, obviously, it seems like you guys are expanding. You're looking to do more and more. Your payouts obviously getting quite high. You're clearly paying out your traders, and you're not going for any more migrations or anything like that. And you survived that, so it's a good sign.
I mean, you had a really long conversation with Alex earlier. Is that the owner of Quant Tekel, one of the founders of Quant Tekel? Is that kind of changed your mindset a lot? What was kind of that conversation like?
Yeah, it was good. It was just basically talking about quite a big in-house team now in Canary Wharf in London, and then you guys are setting up in South Africa and Philippines, or have set up there already, which is obviously like clearly liquidity is not a massive issue. So it's quite good to listen to that. Obviously, I like to know what prop firms are up to inside, as I do trust you with my capital to a degree as well, and to trade with most of you. I mean, like I said, knowing how it runs internally is a completely different light to just looking at what another trader said or looking at their advertising. I can only feel like I really know a prop once I actually know the owner a bit more. But obviously, most people don't get that opportunity. So
exactly, and you can kind of now give the viewers your personal view of that opportunity that you've been given. I mean, a lot of things on social media are very skewed, very like he might have breached the 10K account and now he's going to talk bad or talk shit on the prop firm, which sometimes is a negative thing for prop firms. But I think now you've been introduced to the founders, the owners of Quant Tekel. Now you've kind of seen the workspace here in Canary Wharf. Hopefully that changes the mindset, and then you can start potentially getting accounts with us.
Yeah, I mean, I'll definitely scale with you guys. I mean, like I'm funded with like a lot of props, so there's no reason not to scale with you guys. I mean, it'd only be right to give a proper review on my own channel and go through obviously my experience with you guys. Hopefully it's all good. Like I said, some of our own traders getting paid out with you guys at the moment and not having too many problems with that. I think the only thing is obviously minimum trading days, maybe a consistency rule. I don't know if you guys have that on the funded account, but other than that, like a lot of props have that at the moment, so it's not anything out of the blue. I've literally got it on 3 of my accounts right now where they all have, I think, consistency rules, which I don't personally like massively, but I'm kind of, or the props that don't have it, I kind of already max them out, or pretty much that. So I need to go with someone else, basically.
Yeah, it needs to suit your trading at the same time, you know. I mean, I believe a lot of the rules and a lot of the elements inside Quant are industry standard anyway. So it's nothing like, oh, well, this is like crazy. It's kind of like for me personally, when I trade with Quant, I have to slightly adapt. I have to change my trading style with profitable days, things like that. If I'm making, my first goal on my previous funded account was to just secure the profitable days, and then I can actually start trading normally. So there's ways around the rules that you can work with Quant, but I think it's good for you to be here, and if there is any issues, you know where to come. So that's brilliant.
I mean, I literally had the same thing with a couple props that I've just gotten fun with, where I do have to trade for 3 days and make 0.5% on each one. So it's nothing that I won't be able to handle, or it really pushes me off.
Yeah.
So I mean, one other thing as well with props generally, it's just being really clear with the rules. So if there's any weird rules, which I think props know when they're weird or when they're not necessarily industry standard, and it should be, in my eyes, red highlighted, this like when you're trading with these, or if they change from phase 1 to phase 2 and they change from phase 2 to funded accounts, that they should be really highlighted what the difference is in rules, because as a trader, it seems like you're trying to catch them out a little.
After. So now you've been to the office, you've met the founders, the owners, the staff that work here. Do you think now you're going to start working with QT or trading with QT?
Yeah, don't really see much reason not to. Obviously, it's a bit different, obviously, for me, if I know the owner, a bit different to a standard person, but I don't see a reason not to scale with them. And like I said, next step is to do probably another road to $1 million. Why would I not use Quant Tekel for that?
Yeah, makes sense. So now we're wrapping up the video. Some final thoughts, reflection. What do you think is something that new traders aren't understanding from our perspective as quote unquote professional traders, say, or funded traders? What's like the main piece of advice that you'd give to the people out there?
Probably just to stop searching for the ridiculously high win rate. Stop focusing on being right in the markets. You're never going to be right every single time. It's a case of being able to deal with losses. Like, that's why I'd suggest a book like Best Loser Wins. It's a case of being acceptive of losses. Like I said, it's not judging you on your winners, it's judging you on your losers. It's not how good is your good, it's how good is your bad. That is like the kind of quote that I'm taking from golf and using for trading. And that's what I'd leave for any traders watching this.
Yeah. One quote that I'd add to the golf reference is my granddad used to say, drive for show, putt for dough. So in the challenges, I take that approach where I'm just driving through the challenge, I'm just getting it down the fairway, i.e. like near the green, and then the green is where you're funded. Yeah. And now take it slow, so take that approach, you know. You have to, once you actually get to that funding stage, of course you need to get there first, but once you're there, you take it slow. You take a really structured approach and you don't risk too much. I think de-risking and taking money off the table is so important, and then that helps your psychology. So yeah,
for sure.
I agree.
It's playing the game a little bit, yeah.
Yeah, you got to play with the props a bit.
Shouldn't drive on the green.
Yeah, well, that's what I'm saying. You know, let's just full port.
But people do, yeah. People do.
Well, yeah.
Occasionally they get it in though, but yeah.
But again, that's with experience. As a golfer, you know, you're the more time you spend on the course, the more time you're actually playing golf, the more you realise that you shouldn't drive on the green. So we're going to wrap up the video now. Thank you so much, Rob, for coming on. I really appreciate it, and I'm sure we can do one again in the future.
For sure. Thanks for having me, guys.
All right, guys. Hope you really enjoyed the video with Rob. I'm sure we're going to do another podcast in the future. Let us know in the comment section what influencers or traders that you want to see be interviewed by a member at Tekel, and I'll see you all in the next one.